right, off to a good start. We got the order right. That was what we have to make sure. Thank you all. Welcome, first day of the conference. Hope you guys are having a blast. Buenas tardes. I just had the hardest interview in my life in Spanish, so Miami is here. So for today, we're gonna talk about I think a topic that everyone wants to talk about at this moment in time, especially in our industry. We're super excited to have great 5 panelists here that represents many different aspects of our industry. And I will, without further ado, let them introduce themselves.
Hi, I'm Nicki Sanders, and I am the Principal Developer Advocate at Taxbit. My background is in engineering, and I started as a back-end engineer back in like 2011, and then kind of fell into crypto and blockchain engineering in 2015 when Overstock.com kind of spun up a little venture company to explore what we could do with this technology. So I really focused there mostly on digital securities and digital assets in that sense. I have a couple of patents in that area. So I really started getting into the smart contract stuff pretty early. Got to learn the hard way by reading the compiler and sending emails to the Ethereum Foundation to find their bugs and deal with their compiler issues. So super fun for me. And then I came on to Taxbit in June of 2021 when they were really ready to move past just ingesting data from centralized exchanges and move more into the DeFi space, which if anyone's familiar with DeFi transactions, very difficult to actually read what's going on, even though you can pull the data on chain. What's actually happening in those transactions doesn't always translate one-to-one with a taxable event for the US tax code. So I came on there and was heading up their blockchain engineering group for probably about a year before I switched into just focusing on the external stuff and coming to fun events like these to talk about what we do at Taxbit. And we're really excited to be here.
My name is Chiente Hsu. I am the CEO and co-founder of ALEX. ALEX stands for Automated Liquid Exchange. We are a DeFi built on Bitcoin. Yes, you can build DeFi on Bitcoin. My background is the following. I came from academia. I was a tenure-track professor at Duke and NYU. I know a lot of founders, they are drop out of colleges. We are the opposite. So, and then I joined Wall Street. I was the head of quant for Credit Suisse First Boston, and then head of quant for Morgan Stanley. I was the managing director there, heading a group of PhDs coming out with quantitative systematic trading and investment strategies. And I really fell in love with blockchain technology. I think started with a white paper of Bitcoin. And from there, and really is a personal experience that 2007, 2008, sitting on the trading floor of Credit Suisse, understanding that lots of those legacy financial services can actually be replicated on blockchain. And we get our middleman. And that's where I started falling in love with blockchain. And then I would say early last year, we started really, instead of being the, audience, we start getting the team together, all TradFi quants, all financial engineers. My CTO was the head of equity trading. My co-founder, a wonderful woman, Rachel, she is also coming from TradFi from JP Morgan. So here we are. I was joking with Henry that we are very different type of DeFi. We build on Bitcoin, and then we can talk about that a little bit more. But we are playing the long game in the sense that we are building all the bits and pieces that when the 360 trillion of world wealth start getting tokenized, that we can be ready. So thank you for having me here.
Thank you.
Chris Blodgett. I'm the VP of Operations at Binance US. Hopefully the exchange doesn't need a ton of introduction. Me personally, I spent most of the past decade in private equity, which was rewarding, but cannot hold a candle to crypto when it comes to exciting. Our CEO, Brian, when he hired me promised me, one thing above all else was that there'd be never a dull moment at Binance US. And most of the last year certainly was on track to deliver. And the last month in particular, I think we're all adults here, but oh shit, it's been fun.
My name is James Putra. I am Vice President of Product Strategy for TradeStation. I launched the TradeStation crypto business. Our sole function is a broker. So most of the crypto exchanges are exchange, broker, and custodian. We primarily focus on the brokerage side. We also are the ones that brought the Miami Bowl to Miami. So if you haven't been by to take a look at it, it's sitting at the Miami-Dade College right now. It's pretty awesome. It's 16 feet tall, 16 feet long, 3,500 pounds. So it's quite a spectacle.
Wow, that's awesome. My name is David Micley. I am on the business development team at Wintermute. We're one of the biggest crypto market makers in the space. Background on me, I'm from Boston, live in Boston. Go Celtics. Any Celtics fans here? Nope, we're in Miami, sorry about that. Yeah, background professionally, have experience in traditional finance, used to work at Bridgewater, covering institutional clients and prospects. Got into crypto in 2020, joined a startup called Floating Point Group, was there for a bit. They're a trading and custody platform. Joined Wintermute at the beginning of this year to cover America's business development. There's really three things that we do with external parties. I guess one, just to understand like the way we work, we're a market neutral market maker, which means we're providing liquidity and trading across all the sort of leading CeFi and DeFi venues, trading around $5 billion a day. All algorithmic high frequency trading. Our founders are from Optiverse, so they bring that traditional finance market making experience. There's three things that we do with external parties. One is OTC. We can provide liquidity through user interface, directly communicating with our traders via chat or through our institutional grade API. We work with crypto native hedge funds, individuals, credit investors, and some of the largest financial institutions in the world. We also market make for projects, so tokens that are getting listed on exchanges, we provide liquidity there. And we also do some venture investing in crypto projects and companies that we think will help strengthen and grow the ecosystem.
Awesome, thank you everyone. So we've got market maker, an exchange, tax, DeFi, broker dealer. We've got a lot of different perspectives on this panel here, and many of them have had institutional backgrounds. So the first and most important question that we have, I think, that everyone's asking here is, how do we bring institution into Web3? I'm not sure who wants to take that question, but I think everyone's waiting.
At Taxbit, what we're seeing is a lot of like institutional investors and big enterprise investors are kind of scared to get in. I mean, especially after this past month. I think I wasn't sure if we were allowed to say that word, so I won't say it. But they're scared, right? And the lack of regulation in the space kind of brings that kind of fear. There's just a lot of ambiguity, and there's just not a lot of regulatory clarity. So the US, we have certain laws and regulations and like for tax, and then on the accounting side as well, that they're coming into the crypto space. And I think when those rules get a little more clear, right now they're really ambiguous, almost on purpose, because it's so new. It's hard to like make new rules for a new technology and a new like asset class. Those rules are coming, and I think that will kind of like issue in a whole new wave of institutional and enterprise investment.
So there's something that we talk about, it's creating a vortex. Many people think they got to come in and do a big splash, and what we find is that you really need to develop some institutional knowledge before you can really engage in the space. So starting with something small that's low risk that you can then start to build on is really, really important.
I want to dial back, and when people talk about institutionals, it's like you say Africa is one country. It's not. And then Henry and I had this discussion before, is that institutional, it is a really big spectrum, and it depends what institutional you're talking about. And starting from the fastest money, and I want to say smart money, fastest money is obviously hedge funds. And they are already here. If you think about two types of hedge fund, one is global macro, the other one is a quant hedge fund, that they are already in DeFi all over the place. Why? Hedge fund is about using the leverage to bet on uncorrelated alpha and deliver that to you because they charge you 220, if not 335, right? There are some master funds that charge you 335. For global macro, it's a very exciting place, accessing DeFi space because it's uncorrelated, it's traded 24/7, so the alpha is really uncorrelated. For them, that's very important. For quant, that's very exciting because lots of data on chain. Like my background is quant. It's like really, I'm in a candy shop and I have a sweet tooth. So that they are already all over the place. Particularly quant fund, DeFi, the way they treat each DeFi protocol is like fundamental equity picking. They go to your GitHub, look at how engaged your developers are, and they look at the team. They even have a algorithm screen through your LinkedIn, see if there's any developer team that really forge your background. So these are all algorithmic. So I would say hedge fund is all over the place, but what DeFi can help, coming back to Henry's question, is the liquidity. At the moment, at the DeFi, the liquidity is still very, very segmented. We don't have yet really one big killer app that can aggregate across all the different liquidity, and I think that's coming. Now, so this is one spectrum. I'm taking a lot of space. I'm just talking about the other spectrum. In between, you can use your imagination to fill it. The other spectrum is we like to talk about pension funds, sovereign wealth. That's going to take very, very long. Why? Because their objective function is very different. They want to preserve their wealth and their principal. So for them, and we chat about it, 70% APR is not that exciting for them. Actually, it's a turn-off. They want sustainability. They want to preserve their principal. So for them to come to DeFi, it's going to take very, very long. Most likely it's through VC investment or, outmost maybe some ETF with some DeFi indices. So that's all. And in between, you have whole spectrum. And I'm happy to talk about it later, after this panel with you if you're interested. Thank you.
Yeah, I think there's really two core things that drive institutional adoption. They're actually kind of boring. Infrastructure and compliance, right? The space already has enough opportunities to generate alpha. There's a lot of volatility, but institutions want both of those things. By infrastructure, I mean, how are they going to trade? Crypto native firms feel very comfortable sending a trade request on Telegram to sort of some emoji that gets a response, and that's sort of a different way of working than institutions that are used to single dealer platforms or institutional grade APIs. So at Wintermute, we've been very focused on segmenting the different customer bases of people that need liquidity and thinking about what institutions want. And that goes into sort of the operations, the settlement, separating different services, separating brokers from liquidity providers from custodians. We're solely focused on the liquidity space, sort of get that you're focused TradeStation on the brokerage space. So that's the infrastructure piece. On the compliance piece, with DeFi especially, there's all sorts of questions around KYC, and with crypto in general, there's questions around KYC. So at Wintermute, we registered with the Financial Conduct Authority of the UK. That's where we're based for their KYC processes. I think what institutions require is the knowledge that when they are trading, they're trading against counterparties that are not sanctioned, that they're allowed to trade with. And once you nail those two things, infrastructure and compliance, which are not easy to nail, I think you'll bring a lot more institutional flow and demand into the space.
I think, David, you must have hacked my phone because you stole my talking points. So on the compliance front, I've been at Binance for just over a year now. And in the past 12 months, we've tripled our spend on compliance. We've gotten 10 MTLs. So I think Coinbase, as point of reference, been around about a decade. They have 45 MTLs. The most you can have in the US is 59. And we just celebrated our 3rd birthday a few weeks ago. We've got 41, and we're on track to surpass them to become the most licensed exchange in the US. For better or worse, it's an expensive proposition, but it's table stakes when you're dealing with the full spectrum of customers, in particular institution. On the infrastructure piece, there's a ton we can talk about. One piece that I think is particularly interesting, well, actually pulling it back, so etched in our DNA is to be the most customer-centric business in crypto, and that takes a lot of shades. It's reflected in our pricing. We were the first US exchange to offer free Bitcoin trading. It's reflected in a lot of our products. We're offering the widest selection of and highest APYs of on-chain staking of any US provider. and it's soon to be reflected in our roadmap for things like custody, which I know is very important to institutions. So in addition to our own world-class in-house custody, we, at the risk of sounding like a frat boy, we have a philosophy of BYOC, bring your own custody. So if a Wintermute, for example, has a qualified custodian that they believe in, they don't want to leave, we believe they should have the right and ability and the seamless technology to essentially keep their funds with their qualified custodian off exchange, still have seamless access to liquidity on the exchange. That does a number of things. It eliminates essentially pre-funding. It reduces counterparty risk, and obviously it's far more capital efficient. And now I'm going on too long.
No, that was perfect. Thank you, guys. So from a practical standpoint, the regulators are, setting new rules now. They're now acting. Infrastructure is being built. But putting ourselves in the shoes of institutions and giving kind of advice for our institutional audience here, what is something that they can do to take the first step in? Any advice for any institution that's listening to us right now that what can they do next, besides waiting, right?
Sure, I'll go. So I guess again, it goes back to this idea of just start somewhere. What we've been big advocate for the last 6 years since we've been in the space is you need to start to develop your institutional knowledge in-house. So whether that is to create some silly project that you can build around. We work with an insurance company in Miami who wanted to educate their people on how to use crypto. And it took about 6 months. What they did was they put together a program where they would match their employees. So employee puts $100 in, they'll match $100. They prepared an education program to educate the employees. Within that 6 months, they not only learned how to do all the crypto things you need to do, they started accepting it for insurance premiums. Their CFO went all in and started trading only crypto. So this guy was, from the beginning, first conversation, I want nothing to do with it, to asking for all types of different tools and tips to trade crypto. But that quickly turned into a great retention program for them. It quickly turned into them learning how to do their operations, learning how to handle the assets, learning how to account for those assets, and now they're really active in the space. And we've done this with a number of different firms where we help you get started and think through what are the easy stuff, and then allow you to build your own domain knowledge, and then you'll find your use case. What's tricky is that across the space is a lot of people that want to sell you a lot of stuff you don't need. If you develop your knowledge, your employees will help you figure out how to apply the different use cases.
Again, I always like to dial back. I think one thing about DeFi that we are also fascinated about is there's no counterparty risk, because all the transaction is through smart contract, right? And if you think about financial services, if you take away from the counterparty risk, that means that you don't need a huge balance sheet to run your business. That's ultimately why DeFi is so beautiful. It's going to replace the traditional finance. And then if you're an institution, let's say you are a wealth manager, right? You are a middleman, right? Because you are going on behalf of your investors, your client, go to search for yield. So your utmost objective is get rid of middlemen. And that's how you should come to DeFi if you want to do, for example, yield farming and staking. These are all pretty standardized. I would say in DeFi space, the other beautiful thing about DeFi is that the technology is very commoditized. You stay in this DeFi protocol is very similar to you stay in another DeFi protocol, right? So if that's your objective, let's say you are a Swiss private bank, just be very, very concrete about it, and you want to achieve yield for your investor, for your client, and you don't want to go to investment banks or other wrappers that everybody nibble a little bit because they're the middleman, you should come to DeFi and go to those blue chip DeFi first, stable coin first. The return is still very interesting, still beating the inflation rate. So that's how I will start. And not to mention hedge fund. For hedge fund, if you want to access this 24/7 risk, the most important thing for you is to look at the speed, look at the liquidity of this particular protocol. So these are just two concrete examples that I can think of.
I love that. You're definitely exactly right, but the problem with that is there's so much education needed just to even get to that level. That's what I've been seeing in the industry is institutional access is really hindered by the complexities to get in right now. I think things are like products will come out to kind of like mitigate a lot of those complexities, but right now, I mean, when you're telling someone how to get into DeFi and you're like, okay, you're gonna get this thing called MetaMask, you're gonna put it on in your browser, you're gonna buy Ethereum or whatever crypto on a centralized exchange. You're gonna withdraw, it's gonna take you 3 days. Then you're gonna connect to these weird websites to do, like, it's still kind of strange to do, and it's not super obvious how to do it all the time, and it's super risky. There's
Nicki,
smart,
you're right.
there's smart contract hacks that still happen. I
But
think
remember, money management business is a throat-cutting business. If BlackRock is going to issue an ETF of DeFi index, Vanguard will be the next one. So it's all about the first one who is willing to invest in their human capital, in their technology.
Absolutely.
Right? And then that's what's happening right now. I remember when 1998, I went on the trading floor and very arrogant young doctor, professor saying, we're going to replace, all the quants are going to replace all the traditional portfolio managers. Everybody will laugh at me. But we sat down with one of the biggest money managers in Europe, and we went through code by code, line by line, go through with them with a quant strategy, and they invested $5 billion in that particular strategy. That's the first mover, and I think you're right. But given now that, I think it's also very demand-driven. If your client from the institutional side, your client want to have access to crypto, want to have access to DeFi, you cannot say no. You just got to invest in it and get to start getting your toe wet into it because the competition is out there.
So do you see it like the current market kind of the same way as you saw it back when quants started coming in? Like a few of them are really going to get into it, and they're going to blow everybody else out of the water, and everyone's eventually all going to get there. That's how I kind of see it happening. Like someone's going to be the first mover. They're going to get great yield. They're hopefully not going to lose their private keys. They're going to figure out a good way to store all the tricky parts. They're going to bring in people who know how it all works, and eventually everyone's going to get there.
Eventually everyone get there, but eventually alpha will also decay, right? And then what is the next? So I think that's what's exciting about this sector is that the innovation is where we are right now. The innovation is not about you come to ALEX, you stake, and you yield farm, and you get 30% return. The innovation will come from, again, this 360 trillion wealth in commodity, in fixed income, in real estate. When they start getting tokenized and they want to transact on blockchain, on Bitcoin, or other chain, using the DeFi protocols to transact, then we are in the business. And that's what I believe in this sector.
Yeah, just a few thoughts on sort of what institutions need to be successful in getting into crypto. Yeah, I think it's sort of two separate things. The first is an internal advocate, someone that's really going to own it and educate colleagues, educate the compliance teams, and learn about things they don't know. Bring in experts to talk about various areas. One thing I do is speak to different firms about liquidity and how liquidity works. Open offer to anyone that could be helpful to, but if you need someone to speak about custody or something else, you should find experts in those spaces, educate your teams, and it starts with one advocate that builds up a team, builds up other advocates. And the other thing is just to get a track record, use whatever you want to eventually trade and do. Don't start by just trying to raise a giant fund from LPs without having any experience trading crypto yourself. Both in terms of marketing, it's gonna be more effective to just build up a track record to market that, and in terms of just mitigating risk and understanding really what you're doing, because these things are immutable. So you just get used to all of the settlement, all the sort of things that you need to do when you're actually trading and holding crypto. And those two things, have an advocate, build up a track record, and just you could start small with experimenting. Think of it as an R&D allocation that you just put into it and willing to risk it, but see what you can learn and grow with.
David did it again.
You're going first next
So
time.
I would add one thing that helped for us. So when we first got into the spot markets, we ran into a lot of problems where we interfaced with various firms. We didn't speak the same language. Now when we start interacting with firms like Binance or Wintermute, we've not talked to Alex yet, hopefully after this we can, but we speak the same language. We talk about our compliance people can talk, our risk management departments can talk. That becomes really easy for us to get comfortable to work with folks. When we talk with various DeFi and Web3 protocols, our eyes glaze over because we start talking about deep stuff that doesn't matter to myself or my colleagues from an institutional perspective. From an individual, yeah, I love it, I'll geek out with you all day. But from a, hey, I'm gonna bring my $15 billion worth of customers to your protocol, it's very hard if you're not gonna talk with us in a very familiar language.
So, looking at next year, you know, we're in December, and likely this is going to be the last conference, last big, you know, crypto Web3 conference of the year, and everyone's sort of looking at next year now, and what happened this year has been crazy, to say the least. What are your plans for next year? I think everyone wants to know. You know, and some people call this the winter or the ice age. We joked. But what are we going to do in the winter? What are we going to do in the ice age, right? I think everyone wants to know. Who wants to start?
I'd say there's blood on the streets. This is an exciting time to be greedy. For Binance US specifically, I mean, frankly, it sounds a bit sick, but we are very, very excited by the present environment because fundamentally, we're builders. We've got a decent war chest, plenty of runway, and a bit of breathing room, frankly, after a massive, massive bull run over the last few years. Now it's a quiet period to step back, pay down some of our tech debt, obviously, but build, more importantly, new and exciting products to cater to institutional and retail customers. So yeah, I mean, this is a very exciting time. What I'm most interested in over the next quarter or so, external to Binance, is DC. And it was interesting to see the senator this morning. Frankly, I think more regulation is a net positive for the industry. And you know, as a relative Boy Scout, I'm excited to see what happens. Obviously, politicians can go overboard, but more clarity is going to do us, as an industry, I think, more benefit than harm. And you know, we, and I know a lot of my colleagues here, are getting more involved in the discussion, which is ultimately a good thing.
Yeah, this is the time to get stuff done. It's quiet, it's nice. We don't have the taxi driver talking to us about Bitcoin going to $1 million. I'm super excited about the potential acquisitions that are out there, the consolidation that's going to occur. There's a lot of talented folks building a lot of interesting projects. Being able to connect and potentially acquire and bring them in-house into TradeStation is stuff that we're pretty interested in.
Yeah, so Wintermute was built for winter. Sorry, I just had to say that. That was just terrible. That was cringeworthy.
He was waiting for that for a long time.
Yeah, I know, that was really bad. But no, in all seriousness, yeah, I think there's a lot of opportunity right now, you know, as far as Wintermute's view. First, like on the macro, you know, side of things, all this stuff is painful, but it's good it gets flushed out now. It's good that, you know, FTX fraud is revealed when it's a $30 billion hole instead of a $100 billion hole, or, you know, that's their market valuation before they got too big. But the thing that we're looking at in the future is building, is getting the right infrastructure set up, and it's hiring. A lot of talent on the streets. Wintermute, we're hiring across all functions. We have a UK office, a Singapore office. I focus on the Americas out of the US. So if you're interested in any of the stuff we do on the business development side, on the product side, on the trading side, we're excited to find talent either from traditional finance or from crypto or from anywhere that can bring value to what we're doing and what we're building. And there's definitely a lot of talent out there, so it's an exciting time to find that talent and bring them in-house.
Yeah, I always like to say that crypto winters are for building. During like the hype seasons, you know, anything can make money. anyone can get in and build whatever they want, and then when it fails, you know, all comes down to kind of the fundamentals and the infrastructure that actually works, kind of like rises to the top. So this is the time for innovation. That's going to happen. And for Taxbit, the crypto winter hasn't really hit us. The infrastructure bill kicks in January, which classifies all centralized crypto exchanges as brokers. So that comes with all sorts of compliance and tax rules. So things are going insane for us right now with all of the regulation coming in. I know that some more are supposed to drop soon to give even more clarity. So as those come, Taxbit is ready to handle it all.
I cannot agree more with my lovely co-panelists. We love winter. I'm going to paraphrase somebody you might not like that much. Is when the tide is low, you know who is swimming naked. So none of us are swimming naked right here. So, you know, we are just dug our head and build this infrastructure. And just want to quote some statistics. And sorry, Chris. No, I want to actually quote your CEO who said that DeFi is the end game, right? And but I also want to take a nip away from Chris is that, you know, for example, 2021, 57 trillion were traded on CFA for perpetuals. And I think only like 3% were trading on DeFi. So the pie is huge and is growing for DeFi trading, lend, borrow, and other stuff. So again, we can't wait to see DeFi on Bitcoin to become mature and to be really the proper innovator of this space. Thank you.
Sorry, one last plug is if you are interested in joining the business development team and working with me, seriously reach out. My Telegram is dmicley, D-M-I-C-L-E-Y. We'd love to talk.
Perfect. So any institutional investors, any investors in general is interested in chatting more, we'll have an investor reception at 5:30 across the hallway in a gated room. Come grab me or any of the panelists and we'll love to chat more. So please give it up for our panelists. Thank you. Thank you all.